Well, to the market now, and a decent bounce today. Earlier I spoke to Marcus Padley from Patersons Securities. Well, Marcus Padley, modest gains today, but as the Greek debt crisis rumbles on, is the broad market in a holding pattern?
Well, it has been for about 18 months, Ticky. It's what they call that terrible cliche, a stock picker's market, but, you know, isn't it always a stock picker's market? But the Greek issue is something that's keeping the glass half empty at the moment. We also have the US debt ceiling discussions going on. We're seeing Chinese concerns about their inflation last week, which may lead to some more tightening. And we've got profit warnings popping out all over the place. And the Aussie dollar is still high, which caused one broker to downgrade their view on the resources sector, which is doing it hard at the moment. With the Aussie dollar up, margins are down, inflation's up, their wage costs are up, labour's scarce. It's actually better in the resources, I think, if you're not doing anything at all, you know, a sort of benign explorers doing better than producers at the moment, because they don't have any cost issues or margin issues. But yes, market generally sort of on the slide, bit nervous, waiting for resolution of the Greek issue, number one.
Now, today we've had a little bit more detail from the Reserve Bank with the release of its board minutes. What was important for the equity markets?
We'd obviously heard their statement when they initially made their decision. The basic view is that they do want to raise rates later in the year, and the bet now is that they probably won't need to rush it with the Aussie dollar where it is and with weak employment numbers, and therefore most of the brokers betting on August, maybe betting a little bit early on the next rate rise, maybe left till a little bit later.
Now, coincidentally, I see Centrebet now says it has regulatory approval to take bets on Reserve Bank interest rate decisions. Could that be a good hedging tool?
Oh, absolutely. Against a stock market that's going down, I think 50-50 odds are pretty good.
Fair enough. James Hardie has announced a share buyback. What are the details and the market reaction?
Well, James Hardie, they were potentially one of the companies with a big US business and the currency going the way it's going, could have had a profits warning. Instead, they've come out today saying they've got strong cash flows, that they may well have a buyback. They'll resume paying dividends, although I think the yield on next year's dividend is something like 3.7%, so it's not exactly sexy. I doubt it'll be 100% franked either. This is a stock that they have results on Thursday, by the way. Good news today, bit of relief, share price up 4%, but the truth is they're a play on the US housing market, which is still stuffed. So the trend, which has been there since shortly after the GFC, they peaked with the rest of the market, has been down. It will probably continue despite this brief moment of good news.
Well, just on property, Mirvac says its earnings forecasts remain on track. What's your response to that?
Well, they're in, retail, commercial, residential property. The general message there is, again, that the property market has been doing okay. It hasn't been dazzling. They have said they're going to see, strong earnings growth of 12 to 14% this year. The share price hardly moved. It's another stock and another sector that's really not popular at the moment. The stock's in a downtrend. Good news, but again, unlikely in this market to cause a change of trend, I would think.
Marcus Padley, thanks again for joining Late Line Business.
My pleasure, Ticky.